Good evening, guys. Welcome to another video brought to you by Total Control Traders. Today's video, weekend market deep dive alongside hottest tickers. Tomorrow is going to be our usual ticker reviews where we go over 50 plus tickers to find that golden setup, getting prepared for next week. Now, there are some keynotes I wanted to make. First one, thanks everyone. Thank you for all your support. We have now made it to 130 subscribers with over 5,000 views on YouTube as well. My mind is just completely blown. Oh my God, I'm not a social media type of guy. And I started Twitter. As some of you already know from previous video, March 9th was the date that I started, which was Tuesday? First post on Tuesday. And it's just amazing. It's only been, what, five days? And the followers on Twitter is already catching up to YouTube. 125 followers. Thank you, everyone, for your support. As of yesterday, we made it past 100 followers on Twitter, and it is still growing. Now, based on what I'm seeing, this is nothing of a big crazy following blow up, like, comparing to some of the other profiles out there. And so I would really appreciate it if you really enjoy the content that we provide. Make sure to spread the word. Hope that the only goal here is to help other people make money by participating in the market. So again, thank you for all your support. Now, in today's video, if you might have noticed that the last few market videos, there's been an extended period of time that we spend on the market as well as deep dives versus individual tickers. And that's going to be the same thing on today's video because next week is quite important before the follow through. Next week is OPEX week, monthly option expiry week. And generally, now let's take a look at the schedule wise. Actually, I never even Googled this before. OPEX US option expiry week previous. Does this look great? 19th. Yeah, so this looks right. So let's go back test it. February 19th, January 15th. We are going to back test this, and I'm going to make a marking of it too. Let's do a flag. February, was it 15th? No. February 21st, January, no, this is 2020. February 19th, January 15th. February 19th, January 15th. Let's make it lower. January 15th. And then 2020. Let's do all of 2020. 18, 20, 16, 18, 21. 18, 20. I guess I could have done this before the video, hey? What was it? 16, 18, 21. 16. Bear with me, guys. 18. Right here. 21. August 21 right here. 17, 19, 15, 17. 17. You can probably skip through this video. I'll make a marking of of when we actually start discussing this. 19, 15, 17. 19, 15, 17. Twenty 21 17, and that's it. 20 21 17. Right? 20 21 17. All right. I'm actually going to bookmark that. So let's take a look. For the previous, and the 19th is one that's coming up. So 19, let's do a marking right here. So for the previous 15 OPEX weeks, what has happened? Let's take a look. First one, 2020, January. Wonder if we can do it on the week. So this is the day that expired on the week, and it was up. So 1 out of 1. 1 out of 2. The February one, obvious being the pandemic crash. November one was down as well. So 1 out of 3. And then February one or April one was recovery. So 2 out of 4. This was a break even. 15. Actually, no, it was down. Yeah, from the beginning of the week to the Friday. So this was down. 2 out of 5. From the beginning of the week, 15, it was a break even. Slightly down. 2 out of 6. And this one was green, so 3 out of 7. This is break even. 17. It's about break even. I'll call it 4 out of 8. Then 4 out of 9. 4 out of 10. 4 out of 11. 5 out of 12. 5 out of 13. 5 out of 14. So of the last, ever since beginning of 2021. All right. Now, gonna mark this point. Since over the last 14 OPEX weeks, there has been 5 out of 14 that are red. And now the 15th one is coming up. Let's make a note of that. Okay, 5 out of 14 OPEX week red since January 2020. Now, considering where we are rejecting off of the previous all-time high zone, we are seeing a big wick. And then Friday, we saw some decent upward buying pressure. But remember, what I covered in Twitter as well as our trading chat room. If you haven't checked out the Twitter yet, make sure you check it out at _ total or _ TC traders _ right here, TC traders. Okay, what was discussed is that we are extended, given that it is SPX, it's an index, we are extended on the daily. From the daily 8, Friday was actually a very nice move in the sense that we dragged up the daily 8 quite decently. Now from here, there is I would anticipate a backtest of the daily 8, whether that's just stalling while waiting for the daily 8 to catch up, forming a daily bull flag. That would be most ideal for the next leg up. But with OPEX week coming up next week, the anticipation would be opposite of that. So meaning I would anticipate a little bit more of a downward price action, bringing us to the daily 8. Not anticipating anything crazy, but do understand from a bear's perspective that we have ran up quite a bit since March 4th. On SPX, this run has been 6.37% over 5 trading days. That is pretty big. Okay, generally it's an elevator down and stairs up. In this case, it was opposite. Come here. Come here. The dog wanted to join, so just to say hi. Good boy. Go find mommy. Alright, so from here, what we're expecting, bull flag formation, but do understand the GP is fairly quite a bit of a ways away. As long as the GP hold, that is still bullish. This is worst case scenario. What I'm looking at is first sign hold on the daily 8. If that is lost, makes sense that we hold on the 0.382. It does line up with the previous key zone. We can see multiple rejections here, and then it becomes support, and it's support again, and then support again. Okay, so right here 38.69 would be the most ideal hold if the daily 8 was to be lost. If that is to be lost, GP is a must hold. Price wise, we're looking at 38.12, lines up with GP, the previous support, as well. We see some sort of a bounce here too. Okay, 38.12. So that is on SPX. Now let's take a look at the key driver of the last consolidation, NAS. So on NAS, we finally got that 4-hour trend reversal. It is very clear. Lower low, no follow through, huge dip buying, then technically closed at the new lower close, but no follow through, and then again big dip buying, then a higher low, then a higher high, and we formed another higher low on Friday with buying coming in as well. So NAS is looking strong. What I'm expecting from here on NAS now, especially with OPEX week coming up, same idea, would expect a little bit of a pullback. And if we do get the pullback, as long as this GP is held, you can draw it to a lower zone as well, which might make more sense. So if you draw from the beginning of the move to the high of the move at 13,121 on a daily basis, the GP does line up with this previous resistance, support, right around that 12,542. As long as this holds, what I'll be looking for will be a right shoulder formation on the inverse head and shoulder. Now, considering if we were to reject from this new trend line next week and we hold the GP, let's move this a little bit more backwards. I will be looking at the back test of the GP from this whole consolidation, which also lines up with the key zone. No rejection here, a little bit of support, rejection here, and on this bounce we rejected from the zone, another few rejections, then another bounce, rejected from the zone again. So this GP would expect some sort of reaction if we were to see, whether if we were to see a straight bounce from here, just a straight run, okay, because we have been consolidating on NAS for quite a while. There is a chance of just straight running into the GP before the stall. Most ideal for bulls, you want to take a little bit of a breather. On the daily is actually completely fine. Our size only at 47. So based on the daily perspective, big chance that will just run straight into the GP. Let's take a look at the shorter time frames. All shorter time frames actually look okay too. None of the RSI is way too hot yet. So the chance of us running to GP is actually fairly high before the pullback. So next week, let's see what the action brings. Just remember, OPEX week tends to be choppier or more bearish. 5 out of the last 14 were green, meaning 7 out of the last 14 were red, or 9 out of the last 14. No, I made this wrong. So this is actually 9 out of the 14 are red. All right. Next, Dow's new all-time high close. Look at that. Now let's take a look at what the targets look like, because we are blasting through the 1-to-1 extension target from the leg 3 of Elliott wave projection. Now we're looking at 1.272 as a target. Let's see if that lines up with the most recent price action. What a beautiful hold on this pandemic trend line, hey? So you could draw it a bit differently too. You could say, let's see, would this work? No, we didn't come back to touch. So the white line works better. Okay. So if we were to use the most recent price action, the 1.618 is near that zone of the 1.272 from the leg 3, but it doesn't line up enough for me to believe it. So short-term wise, I would watch for an action around 32,954. And then from there, we'll be somewhere around here, 34,000 to 34,500. That will be the next resistance I'll be looking at. Right around there. Right. Now, on Friday, I shared a thesis on why I think there will be potential long consolidation, long dragged out, decent size consolidation coming. And the last time I shared something like this was on February 16th, the day that this all begun. And I shared reasons for it. I believe there were 3 reasons, maybe 4. Generally, I look for, as long as it's 3 reasons or more, I do believe that it is a cause for concern and it will happen. So now on this one is a little bit different because I'm looking a little bit further out and I'm going to discuss it with you guys. I also shared it on Twitter, so make sure you check it out. It's fairly detailed on Twitter. Where to go? Oh, right here. All right. So I couldn't, Twitter limits the amount of text, and first reason is sell in May and go away. There's a reason for that saying, and it's obvious, you know, it's been repeat multiple times year over year. Now, second reason, US 10-year potentially topping out with daily bear divergence, and this is a leading indicator. So let's take a look at that. US 10 years, and I generally use the 10-year over 2-year versus just a 10-year. So on the US 10-year, you can see a big daily bear divergence forming. We are potentially topping out. 10-year over 2-year, similar idea. There was a huge bear divergence. This is more so a monthly bear divergence. Is it? Nope. Okay, weekly? Weekly bear divergence. All right, so still longer time frame as well. Weekly bear divergence on the US 10-year over 2-year. Now that is reason number 2. Reason number 3, VIX coming up to key monthly RSI support. VIX, RSI support, monthly. We can see previously. This, it's going to be more so a zone somewhere around 50. I didn't draw that properly, did I? It's a little bit lower. Yeah, that looks better. Around that 47.85 on the monthly RSI. We can see previous double bounce. And then not too much happening here. Also another bounce. It's going to be around 45 to 47.85. Looks like where it usually bounces from. And then you can also see resistances from below serving as resistance, and then another bounce. So if we were to look at the previous big bounces, they were all from this area. I want to say 47.5. Let's change this. Okay, 45. Nope. And let's eyeball it. 45.88 roughly. Key RSI support. Once that's reached, if you look at this monthly chart, okay, the monthly pops, the last one 30 months, then 25 months. This one is a lot longer. 2011 to 2015 was a decent run for the market, 48, and then before that was another 15. Before that was 19. So generally is about 20-ish, 20 trading months. And from here, if we're looking at 20, it's coming up, right? 15 to 20, that's coming up. We're already 12 months in, 1 year of straight run based on the monthly chart on VIX. Makes sense if we were to come to this main RSI support, that we will see somewhat of a bounce. So that's reason number 3. Reason number 4, US dollars. We're seeing monthly bull divergence right here. RSI is trending down while price action is trending up. Now on the shorter time frame, there is a formation of potential formation of a head and shoulders. It's not that clear because this did break down but got immediately bought up from support. New lows, lack of follow through. So there is a chance of this head and shoulders still playing. Not that ideal. Again, not that ideal because of this breakdown, but there's a chance. Daily wise, we are looking at potentially lower price action to come for US dollars, but on the long term, if you're a long-term player, US dollar is a pretty good spot for buying. Monthly, we are still trading under the monthly 8. Big monthly bull divergence forming. That's reason number 4. And then reason number 5, gold monthly bull flag. So on gold, we can see monthly forming a bull flag. We did break under the monthly 8, but let's take a look at this. So this was the previous move. This is the previous move. The top 2 is more similar, where we topped out, come down, immediate pullback with a bounce, come down again to meet that bottom. So now we come down with a bounce and then come down again, meet that previous high. That is key, previous high, and we are seeing support from there. Okay, now there is a chance we're gonna see 4 months straight bull run on gold. So that is reason number 5. 5 reasons, more than enough to convince me that there is going to be a consolidation coming, and this is not going to be a correction that we have seen in February. It's not going to be the same. This is going to be a consolidation. However, there's wild theories out there saying, you know, you're going to be looking at the biggest pullback, bigger than pandemic. I don't believe that. You know, we are in the market not to be right, but we are here to We're participating to make money. So gold, I'm going to be judging it by the day. But on this pullback, what I would be expecting, it didn't drop to the top, right there. What I would expect at the maximum, well, I did have it drawn already. At the maximum, for now, we gotta see some price actions on this pullback first. Worst case scenario, I'd be looking at the GP, which is a previous key zone. You can see resistance, multiple rejections down here as well. And then the breakout, fake out before coming back to support of the lower part of the zone, support again. And then you can see support from here again and rejections from there. So this key zone lining up with GP right around that 2800 to 2860, I would expect, ideally, that would be the worst case scenario. It does also line up with 2008. Yeah, 2008 trend line. You can see support, double support here, and then another support on the 2016 pullback, 2015, 2016 pullback, and then another support on the 2018 pullback. Blasted through it for the pandemic pullback, but it would line up with GP. So I am going to mark this for the consolidation. We could be looking at a little bit further back. It would be somewhere around there. That does give a lot of time as well. So if you look at this, what is it from here? Daily wise, it's, where'd it go? Oh, it's further down. We could be looking into 2022. So this could be a very long-term consolidation. We could also come down straight down to the zone. Generally, consolidations don't last that long. So September, August, that would make a little bit more sense. But just something to be aware, all right? Market, I am anticipating a long-term, dragged out, big consolidation coming, whether that's going to be around the 0.382 or the GP. But are we going to break through the pandemic lows? We will have to see. There is a chance. Always know there is a chance. But as of the way the market stands right now, I am anticipating new all-time highs before that happens. And my chart just went all weird. There we go. So I am anticipating new all-time highs before that big consolidation summer sell-off come. Okay, so that's it for the market. Let's take a look at the hottest tickers. First one, Bitcoin. Congrats, Bitcoin bulls, new highs. Now remember what I said on the last video? We will be seeing a bear divergence on the new high, and there is the daily bear divergence. On the weekly, big bear divergence as well, as drawn out here. Don't need that. Yeah, so this was drawn from last video. On the new high, would anticipate weekly bear divergence, and that has formed. It would take quite a bit. Now on the monthly, there's no bear divergence yet, but in order for this chart to continue blasting through, we really need to see a huge blast through to negate this daily and weekly bear divergence in order to see decent follow through. The way it stands, wouldn't trust this move. Big bear divergence on the daily and weekly, which is rare to see to begin with. But it is especially on the weekly bear divergence. But as you're seeing both daily and weekly forming, that is a big red flag. Next, Tesla. Holding that 88. This actually looks pretty amazing. We bounced from the GP and the lower trend line of the channel. Long-term channel chart is a little bit messy. not that bad. We did see bounce from the lower channel. We are still trading under the weekly 8, so that is something to note. But we are holding the daily 8. Haven't come back to back test this trend line yet, have we? Oh yeah, okay. We saw an immediate back test of this previous trend line that was keeping us down. So that is amazing. We are ready to go. Now we can delete this. And where did the pullback go to? Looks like there's more room to the upside. GP lines up with the upper trend line of the channel. There's a chance we visit that before seeing some consolidation. That would bring us to the 750 zone. Looking bullish on Tesla. Again, that's going to be dependent on what the market does with OPEX week coming up. Next, PTON. PTON relatively weak, a little bit weaker than the other tickers. We did see a bounce from the 0.382. That's drawn from the lows to the lower high. We're going to need to see what the next 2 days bring, whether if we break down to see the GP, which I'm not seeing any confluence of. So PTON still relatively weak. We are trading under the daily 8 again. If we were to make a new low on the daily, I would expect a daily bull divergence to form. That would be an ideal spot to add. Next, PLTR. Relative strength. Held that daily 8, and we did see a close at the high of the day, higher than Friday's close or Thursday's close. However, bull volume not exactly there. There is a chance that this is just completely out of sellers now. If you look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9 straight days of selling, unable to break down below the key zone. There's key zone before where we saw a little bit of rejection, support, and support, unable to break down below it. Now, what it looks like to me is even little bull volumes are able to push this price up. Likely we are out of sellers on PLTR. Looking bullish on it, but still exercising caution until the end of OPEX week. So I'm in it. We'll be looking to add to it. Next, XOM. Continuation. Little bit of a chopstick top with, is that weekly bear? No weekly bear divergence. There is a little bit of a daily bear divergence forming. So from here, this previous high seems like we might be forming a RSI trend line kind of a thing. But regardless, that is a daily bear divergence. And this chart keeps moving by itself. I don't remember where it was, but I think it's somewhere there. Rejection, breakout, fake out, rejection, rejection. And now we are trading over it. So this is actually pretty good. Came back down to the trend line, immediate backtest. We're going to need to see major follow through to negate the daily bear divergence, as well as this trend line, new trend line that's been keeping us down. Overall, would anticipate a little bit of a pullback on the daily. We need that daily higher low. This has been a straight run since this last GP bounce. This has been a straight run for 41%. Congrats, XOM bulls. Next, Wayfair. So there is a chance of this wedge. We're gonna need to see Monday, Tuesday, ideally break through. Early next week, break through these trend lines, these wedge trend lines. We are playing it for the monthly bull flag, and we are seeing follow through on it. The highest close, the highest close ever on the monthly. So far, we still have 18 days left. We still have quite a bit of a trading days left on this monthly candle, but right now, as the way it stands, we are having its highest close ever. Volume looks great, 13 days in, roughly about half of the month in, and we're already seeing more than half of previous month, February's bull volume. Loving the setup. We're gonna need to see a follow through this month, next month. All right, that's it for today's weekend market video. Hope you guys enjoy the content. Don't forget to give a thumbs up, please. If you're looking to build that pot of gold and enjoy the content that we provide, please consider to subscribe to our channel where we provide new videos daily. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer 7-day free trials to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade calls. Hope you guys stay safe and be in control. Thanks for watching, guys. I will see you in the next video.